Why is everyone speculating and gambling, hoping that one day their investments will pay off? It's time to make money on the buy. 80% of all investments out there have a negative return. If you're investing in something that you don't understand, like the stock market, or if you're not a real estate investor, or crypto, you're just throwing money away. Instead, you want to win first, make money on the buy, then play. It's time to avoid speculation, reduce risk through the right education, and improve your time management. I'm obviously intense about this because it's an important topic. Man, I just feel like too many people invest on a hunch. They get a stock tip. They hear about someone else that's really good at investing or that had success in the past and think that they should just jump on and model it. But the reality is we all have our own investor DNA, right? It's our core values, our core competencies. What do you really know about? It's our core drivers. What are you interested in? And then finally, it's really about focusing first instead of diversifying. Diversifying is diversification for far too many people. They spread themselves thin. They don't know what's going to pay off. They limit their overall upside potential. And Andrew Carnegie said he invested all of his eggs in one basket and watched it like a hawk. So there's a lot of confidence when it comes to investing that doesn't necessarily have intelligence. We feel confident in the 1990s because the stock market went up, or we feel really confident, in 2003 to 2007 in real estate because it was just going up. We find out who's swimming naked when the tide rolls back. See, all ships rise with the tide, but Buffett says we find out who's swimming naked when it rolls back, and that's what a lot of people are doing with their investing. The definition of ignorance is that high confidence with low intelligence. I've been there before. I was in real estate before I knew anything about real estate. My brother-in-law came to me and said, hey, you got 25 grand, I've got a deal that's gonna close, I'll be able to flip it, and within 3 months, I'll give you back 50 grand, and that's exactly what he did. So I boosted my confidence without the knowledge. Then the second deal, my buddy Joel comes to me, he goes, hey, I've got a friend who's gonna lose his home in Las Vegas. It's got a lot of equity, like 90 grand. He just barely got another job, but he's so far behind in his payments, so I came in and I bought the home before it went into default. I leased it out to him, helped him improve his credit score, and then we split the equity when he bought it back, so no money down, and I made 90 grand simply because it was a hot time in the market in the early 2000s. Once again, I didn't know anything about real estate. I just got that false sense of confidence, felt like I was Midas and that anything I touched was going to turn to gold. It wasn't part of my investor DNA. I wasn't going to courses or researching or increasing my intelligence in these areas. I was actually increasing my arrogance, and ultimately it became a demise in certain areas. There's so many factors that were outside of my control. I figured if these things worked out, well, then I might as well just do more. So I ended up getting over 100 properties that I owned between 20% and 100% of. Some I never even went and looked at. Some I was completely reliant upon someone else that was doing the due diligence. I didn't even ask them what they were doing. I just like, this is a great partnership. I'm the money, you're the intelligence, but when things got tough, they walked away, I was left holding the bag, and now all of a sudden, instead of having cash flow come in, cash flow started to go out. See, the situation created ignorance that I absolutely confused for knowledge, and really there's this equation that I think is essential with investing. It's the value equation. If you want more financial capital, if you want to be a better investor, if you want to improve your cash flow, there's two precious forms of capital that drive that. First is your mental capital. It's your knowledge, your wisdom, your tools, systems, and strategies and insights. If you don't have mental capital, you're gambling, not investing. And there's far more people out there gambling rather than investing. They don't know what's going on in the boardrooms. They don't know how to read the reports. And they're being confused and taught that, oh, you got to know about tax liens and options trading and real estate and the stock market and business. And the more you try to know, the less you actually can grow, the less you can actually improve, the less focused you are, and the more distracted you become. As a matter of fact, when I was doing that much real estate, not loving it, I was ruining vacations doing this stuff. So the first thing is you've got to have the right mental capital to be a good investor. The second is the right relationship capital. So if we're using real estate, it might be the right lenders and property managers and partners and tenants, because people are the only real assets in the world. Real estate doesn't write checks, it's the people that write the checks. So you know how to add value to the people with the knowledge you have? If you do, you become a better investor. You start thinking about how to protect the downside, how to manage risk. And really, in a win-then-play methodology, it's how can you create cash flow right from the beginning that's positive? Not waiting for 30 years, not scrimping and sacrificing, pinching pennies till you get blisters on your fingers, and then hoping compound interest will help you win 30 years from now. Far too many people aren't winning. We're seeing that the numbers are astronomically low, that people actually can live off of their assets when they turn 65. So it's a failed financial experiment. See, Win Then Play is all about cash flow. It's 3 easy steps you can use right now to start winning before you play. So the first immediate cash flow step is, what do you have right now that's valuable, or that you can use as current knowledge or relationship capital to increase it? So I've had people that they have a business, and they're so good at that business that they actually start training and showing other people how to be good at business too. So improving their industry. This is what I did in my own life. I used to train financial advisors, where I would bring them to study groups, and I would do 2 conference calls a month, and they would pay me per month, and I would just show them. And all I was doing was sharing my best practices. I was getting their best practices, and it was a way for me to get paid to host a study group, which I would have been part of one anyway. Second thing, where can you work with the deals, right? Find something that is worth more than what's being asked for. So it might be that in a bad time for the economy, people don't have liquidity. They don't have enough cash flow. So they have to liquidate assets, and they have to get that money quickly. The more important it is for them to get that immediately, the more negotiating power you have to buy that at a better price. So I was buying a cabin. There were three total people, me and 2 others, that were looking to buy this cabin. But because I had cash, number 1, I got the deal. Number 2, I was able to knock off 50 grand more than the other people when they were looking to buy it, because I could close within 9 days. So cash is one of those profitable things. If you're a business, sometimes rather than financing something or having a line of credit, think about the interest that you save, and think about sometimes you have negotiating power to get 10, 20% knocked off if you're writing a check for an entire inventory now rather than over time. And so that's an immediate return. You've already made the win before the deal's even made. The third thing is really around ideas and people. This goes back to that mental capital, right? What do you know that you know a lot about? What area of finance? What area of money? What area of investing? And really just dial in and focus there and start going to courses, get educated, spend time with the right people that are successful in that area, so you're building up your value as an investor, right? What do you have that could create value today? Now, some could be just insights you're getting right here on this video, where you're like, wait, I have existing assets not creating cash flow. Like you might have a retirement plan, and with one notion of a 72T distribution, you can start creating cash flow rather than accumulate. Or maybe you have a great credit score, and you know investors that could use a credit score. You could finance properties for them and charge them higher than what you're paying the institution. And now you're just using the fact that you have good mental and relationship capital to start creating even more cash flow. Right? So what do you have right now? It might be refinancing and restructuring loans that can improve your cash flow. That's an immediate win. It might be that you have underperforming assets, and you could reallocate those underperforming assets to pay off higher interest rate loans. That's a guaranteed return today, just because you have the insight, the savvy, and the knowledge, not because it was hard work, not because you waited 30 years, not because you were overly speculative or aggressive. So where do you have investments? Like, I could use multiple mental and relationship capital examples. I once had a bunch of inventory that really was, I saw that the method of our delivery was being antiquated because of the digital era. So I just went to our biggest fans and said, you can have it for whatever price you want to pay for it. And we liquidated it. They got something they wanted for what they valued because they chose the number. We made money from something that could be valuable to them at that day, but within a few years was going to become antiquated because of the, it could be downloads versus CDs or DVDs. It could be an ebook rather than a physical book. Like, we just started to look, what resources, what assets? And so you want to go through and list this out. Who do you know that provides massive value to your life and great insight? Spend more time with them. Dial in just one area of your finances to be a better investor. Where do you want to be known for investing? Not spreading yourself thin, not diversifying, but get really clear about what you can do today to be better off because you really dialed that in. For me, it wasn't real estate. I decided that my game was going to be intellectual property. I started to say, I'm going at least twice a year to improve my speaking ability. I'm going to hire a consultant so I can get better on video. I'm going to be working with writers, and I'm going to go to courses that help me become a better writer. And as I started to focus on that, I grew that skill set with mental capital. And then I said, what relationships help me to be more effective with this? And started to build that relationship capital. And it's equaled a lot more financial capital. It's more rewarding. It's less risky. There's not a lot of speculation. The investment's a lot closer to home, meaning it's part of my investor DNA, not something far away from me that I don't understand why it would work, when it would work, or who's involved with it. Right? So as you start looking at the relationships and really the area that you're going to really emphasize and dial in, and then eliminate all the distractions. Eliminate all the riffraff. There's so many distractions that are disguised as opportunities, and you could recover that time. You don't need to waste time and money on something that may or may not pay off. I mean, I did a lot of speculation early on before I knew this. I did IPOs, one paid off, one didn't. I did oil and gas. Rather than cash coming to me, I was writing checks for more drilling. You know, I mean, there's so much that sounds seductive, but is it for you? The hardest thing in this, in playing to win, is it feels like everyone else is doing it. So there's this myth where you go, oh, I guess that's how everyone else does it. Playing not to lose is where you just almost give up or you're just so scared. Neither of those are empowering. It's time for you to win before you play and make money on the buy. The way to do that, you've got to build up cash, you've got to have great relationships, and you got to get dialed in one area of investing. So, we want you to do that. Win then play, avoid risk, no more speculation. You want to have education, reduce that risk, improve your time management by not listening to things that aren't in your realm in your investor DNA. And now you're going to have the knowledge to transform your thoughts into profits and build the life you love. We've got even more on this topic, so you can check out our other video on relationship capital.